As Bitcoin prices breach new all-time highs and continue to climb higher, what really is the actual value of this cryptocurrency and this assets that's taken headlines by storm? Steve Hanke, professor of applied economics at Johns Hopkins University, is here to discuss cryptocurrency valuations along with monetary policy. Professor Hanke, welcome back. We're speaking on the second day of Jerome Powell's testimony with Congress, so we'll touch on some of the quotes that he's made in regards to our economy. But first, I want to visit Bitcoin. What do you think of Bitcoin? You and I have never spoken about this subject before, and I'm very interested to get your thoughts about why the price has climbed up to $50,000.
It's climbed because there's a tremendous amount of speculation and a herd of speculators bidding on Bitcoin. That's why it's going up. So its market price, its market value is what it is. You know, it's about 49,000, almost 50,000 today per Bitcoin. But then there's another issue, and that is, well, what's the fundamental value of Bitcoin? And the fundamental value is zero. And people say, how can you say that? The price is almost 50,000. It was up to almost 60,000, an all-time high. How can you say the fundamental value is zero? And the fundamental value is zero. And the easiest way to get that under your hat is to think in terms of the flow of income generated by Bitcoin, and the flow is zero. It's not like money. Money broadly defined, most fiat monies broadly defined, have a fundamental value because they pay interest. If you look at the 14 components of M4, that's the broadest money measure in the United States, 10 of those components, for example, like treasury bills, that's a component of broad money. Treasury bills pay interest. Well, Bitcoin doesn't pay interest. That's why you can say unambiguously that it has a fundamental value of zero. It pays no interest.
Okay, let's talk about valuations for an asset that doesn't generate cash flow. I'll bring up an interesting question that I remember being asked by one of my professors in finance way back when I was still in university. And the question was, suppose scientists get a hold of a dinosaur's DNA and they reverse engineer it, and then they rebirth a new dinosaur. So now we have a dinosaur for the first time since their extinction. And now people are starting to bid on it. There's an auction on how much this dinosaur would be worth. How would you value this dinosaur, this new asset, this new thing that no one's ever seen before?
Well, the fundamental value would be if you could put it in a zoo and you could charge people for coming in and looking at the thing, and you could copyright it, and so pictures would generate royalties and things like that. It would have a fundamental value, and you could figure out the present value of what those income flows from viewing the dinosaur and doing whatever you want to do with the dinosaur, medical tests and all the rest of it. That would be the fundamental value, is a present value of the cash flow, net free cash flow that was generated. The market value might be quite divergent from that. You might get huge speculation in the thing, or maybe it would be discounted at a very high discount rate or something like that, because you thought that dinosaur that all of a sudden was brought to life would die on you.
Right.
And the free cash flow that you were projecting would carry a lot of risk associated with it. So if you did a risk-adjusted discounting of free cash flow, maybe you'd use a very high interest rate, and the present value would be quite low, actually, because you think the thing is going to keel over tomorrow and no one would be able to see it again.
So you think Bitcoin doesn't have any of those properties? It doesn't have any fundamental value. It doesn't have the inherent ability to generate cash flow, and so it should be worth zero? Is that your view?
Well, that is the fundamental value. The value in the market is the value what the market participants are putting on it. They're just two different things. It's obviously a highly speculative thing. It's very volatile, and that gets into the fact that it is not a currency because it is not a stable unit of account. To be a currency, you have to have a pretty stable unit of account, a yardstick that is shall we say, constant. That would be the ideal kind of thing that isn't changing around.
Okay.
So as a result of that, David, it's not used in transactions. Plus, it's very costly to use Bitcoin in transactions. It's not used as a pricing or invoicing unit of account because it's too unstable. Nothing is priced in Bitcoin, and it's not all used as a unit for calculating deferred payments. You don't have mortgages that are made out in Bitcoin. You'd have to be insane to sign a mortgage that was denominated in Bitcoin. So it's the unit of account thing that actually is the real clincher on the thing. And the reason why something like, for example, the US dollar is the international unit of account for almost all commodities and many, many manufacturing items, even manufacturing items manufactured in Europe. What are a lot of them priced in and invoiced in? US dollars, not euros, not pound sterling. The same with the Japanese yen. The Japanese produce a lot of manufactured goods. A lot of those are actually priced in US dollars. They're not priced in yen.
Professor Hanke, the Bitcoin price then, okay, so do you think it's fairly valued at $50,000 because of the fundamental, if the face value here is solely driven by demand and this herd mentality? Well, right now I can tell you that most of the sentiment around Bitcoin within the crypto community, at least, is very bullish. So is that a bull case for you then? Because if the herd keeps going into this with a bullish mentality, isn't that just going to keep driving the asset up?
It could. We don't know. It's a speculative asset that isn't used for much of anything. It's an unreliable store of value, not used in transactions. It is used in a lot of illegal activities because they say it's hard to trace and it's anonymous. It's actually could be traced a lot more effectively than people actually think.
Sure.
But the bottom line is I'm not speculating in it. If you want a speculation in something highly volatile, or you want to make some kind of bet that you have some insight as to where things are going and you think it's going up,
right,
you buy. I think the fundamental value is zero, and I think there will be competitors in there that are much superior, and that ultimately this is going to go into a death spiral, and Bitcoin will its value will eventually approach its fundamental value.
Okay.
When I know, I have no crystal ball to tell you when it happen.
Well, no one knows when, but how? What about the question of how or why? Why would people all of a sudden come to the realization that its value is zero? How are you going to convince the crypto community that's heavily invested into this asset that everyone's wrong?
Because there'll be very serious, reliable cryptos ultimately that are put into the market, and it will be the competitive currency market that determines ultimately the value of this speculative asset. And I think there's a pretty good chance that it'll go down to close to zero.
Okay, so let's talk about this new crypto, or ideal crypto, in just a bit. But one final question about Bitcoin. People have been comparing Bitcoin to gold, and we know that gold, like most commodities, follow cycles up and down, up and down. Do you think Bitcoin is currently in the super cycle of bullish action?
I have no clue. I mean, it's not in the same to compare it to gold is a joke. Actually, gold's been around for thousands of years. The golden constant is that over the long run, you can purchase a constant and consistent bundle of goods and services with gold. Today, the same basket that you could with an ounce of gold 100 years ago, and that'll probably be the same going 100 years going forward. So gold is a currency, by the way. Bitcoin is not. So you're comparing apples and oranges here, David. And these crypto fanatics, I would say, they're not analytical. They might be making lots of money. I'm not arguing about that. That's not the point. The point is that Bitcoin is not a currency, and you can't compare it to gold, and gold is a currency.
Okay. So let's talk about this competitor to Bitcoin that you mentioned. So suppose a new coin were to come out that could outcompete Bitcoin and people would realize, okay, Bitcoin is really not an ideal asset. What would this coin look like? Well, first of all, does it already exist in the market? And if
Well,
not,
it
what would
really
it
does.
look like?
It doesn't exist. There have been attempts, this whole so-called stable coin space, people have tried to come up with something that's more stable, shall we say, and reliable than Bitcoin. But the way to go, and the geeks who've been involved in the cryptos just don't understand money very well, or the history of money. What you should do is establish a private currency board that would issue a liability, and that issue would be a currency. And that currency board currency would be backed 100% with some anchor asset, and that anchor asset could be another currency like the US dollar, or it could be gold. You could have a gold currency board, and the money or liability issued by the currency board would trade at a fixed exchange rate and be freely convertible to whatever the anchor happened to be. So if it was a gold-backed currency board, you would have the unit of gold that was in the currency being issued. That's a liability, and that would be a clone of a unit of gold. Or you could have a dollar backed, and that would be the currency being issued by the currency board would be a clone of the US dollar or the Swiss franc.
But why would it be based on fiat? I mean, people are, what is the US dollar anchored on, Professor? What is fiat money based on?
Well, it isn't based on anything. It does, most of it does pay interest though, so it does have some fundamental value, but it's a fiat currency. Gold is not a fiat currency, and furthermore, gold has the advantage it's not issued or a liability of anyone.
Okay,
it's not a liability of a sovereign, so it makes it very attractive for places like Turkey, Iran, Russia that want to de-dollarize and get away from the dollar.
Right.
They should install a currency board based on gold, and then you would have a Turkish lira that was a clone of gold, or a Russian ruble that was a clone of gold.
Yeah.
Or Iranian rial that was a clone of gold.
So something like a gold-backed cryptocurrency is what you'd like to see.
Well, so that's one possibility. You could have the main thing if you're going to have a crypto that is used and really drives out things like, drives out all the cryptos that are in existence now. If you had a currency board based crypto, believe me, it would drive all the cryptos that we see in the market right now off to the sidelines. Okay. It would be much superior.
All right, and
I might add, Dr. Kurt Schuler and I have all the legal bylaws and everything else for one of these things. It's very straightforward.
Okay. All right, great.
To do it would be very easy.
Let's turn the page now to monetary policy and talk about some of Jerome Powell's notable quotes that I've jotted down for you to comment on. I know you and I did an entire episode on why the M2 money supply's growth is going to contribute to GDP growth. But listen to this. This was one of Powell's quotes from his testimony this week. The growth of M2 doesn't have a relationship with economic growth anymore. The relationship with the money supply is something we have to unlearn. Is he right? Do we have to unlearn everything you just told me 2 weeks ago?
The Chairman Powell's clearly delusional. I don't know. I can't believe the chairman of a central bank actually said that, but I can, because they're all singing from the same songbook. They produce money, and they're telling us that money is irrelevant. This is a ridiculous statement just on the face of it. The guy's coming up for a reappointment next year. If I was in the U.S. Congress, believe me, I'd be doing some questioning of the chairman of the Federal Reserve.
Why is he saying that? For the people who haven't watched our last episode, can you give us a 1-minute rundown of the relationship between M2 and growth and why you think he's wrong?
Okay. When we're talking about growth, you have to be careful. We're talking about there's a link that's almost 1-to-1 between the growth in broad money, and M2 happens to be the broadest measure that the Fed has. M4, put out by the Center for Financial Stability, is actually a better measure, in my view. But those broad money measures are linked very closely to growth in nominal GDP. And nominal GDP includes real economic growth plus inflation. So if you have the money supply broadly measured going up fast, let's say it's going up at 20% or 25%, 30%, that's fast. And you have the max amount that you can squeeze out of the economy in terms of real growth. Let's say it's 5%. You subtract the 5% from whatever the money supply growth is, and you got inflation is the residual, the remainder that's left. So right now, what do we have? Last year, M2 grew at 26% per annum. That's the fastest growth in M2 since 1943. We know this year, given what the Fed is going to do, they've already told us they're going to be monetizing debt at the rate of $120 billion per month. If you add those up over the year, you get a 12% increase in this year, 2021's M2, without even increasing bank credit or anything else. So that is what, 12%, to put that into context. Mm-hmm. That's twice as fast as M2 has been growing over the last 20 years. So we got a lot of juice in the system already. A lot of money is baked in the cake already. That means that nominal GDP is going up. It's baked in the cake. Powell is missing it. He is refusing to talk about the product that the Federal Reserve is in control of.
Yeah.
And he's saying it doesn't make any difference what the Fed does. Well, most people think it makes a lot of difference what the Fed is doing. Powell, as I say, is really delusional.
Right. Okay. All right. Well, he made another quote on inflation. I'd like to get your comment on this one as well. Inflation will be volatile over the next few months, but the effects won't be large or persistent. How are you reading that statement? Is he communicating that inflation is not a priority for him and the Fed for the next few months?
Yes, that's what he's saying, because he says money doesn't matter. I'm saying money matters.
Right.
Money is the engine and fuel in the engine that drives nominal GDP growth, which includes a real component and an inflation component. And anyone arguing against that is reading some tea leaves that I don't know about. Maybe he could be reading the modern monetary theory playbook, which is loony. I mean, this is loony.
Well, yeah, the MMT theory. I mean, the MMT thesis does suggest that you can print money with no consequence of inflation. That's what this theory subscribes to, right? Isn't that? Did that happen?
Yeah. That's the nub of the story. And I'm saying the two quotes that you've given me by the chairman of the Federal Reserve, Jerome Powell, suggest that he's been reading that at night under the blanket with a flashlight.
Okay. Let's do another episode another time and just talk about MMT and why you think it's probably not correct. But final question: you and I were talking about Canadian inflation offline, and I'm bringing up this example because I think it's interesting. People were saying that the CPI doesn't accurately measure real life inflation. It's just government data is not reliable. Well, here's an example of a revision to CPI upwards. Can you comment on this?
Well, the Canadians, they didn't just revise the number. They had the annual inflation for January was printed at 1.5% per annum, and they revised that up to 1.77. But the interesting thing, it isn't a normal revision in the sense that they said the methodology they were using to construct the CPI price index in Canada was flawed. So the way they were measuring it, they said was flawed, which usually isn't the case. In a normal revision, they just say, we print 1.5%, and then they come out with a revision saying it's 1.77, and that's the end of it. But the Canadian thing was unique in the sense that they said they really had used the wrong method to be measuring inflation in the first place, and they've changed the method.
How often do you see this from an industrialized country admitting that their revisions were based on erroneous calculations or methodology?
It's pretty rare.
Okay.
I'm not saying that it doesn't happen. The main thing is no one admits that
Do you think the Bureau of Labor Statistics should be doing this kind of revision?
Well, the Bureau of Labor Statistics has such a grab bag of inflation metrics that they use that they can choose any one of them, and they're all over the map.
All right, so we won't be expecting this kind of inflation adjustment upwards from the U.S. anytime soon, is what you're saying?
Well, maybe not this kind of this. I think inflation is going up, and there will be if there are any adjustments in the U.S. they'll be up, and the actual measures reported will be continue to go up.
I remember last time you spoke to me, you said that this year you could expect inflation to well surpass the Fed's 2% target. I think you said that would be a real possibility, right? I think Jerome Powell would disagree with you. He says it's not going to be large or persistent. Those are his words.
Well, no, he hedged himself. What he's really saying, he's agreeing with me. He knows it's baked in the cake and it will be above 2%. But he's saying, don't worry about it. It's not going to be a long-term thing. Just a temporary little blip in the thing.
All right.
I completely disagree with that.
Yeah. Okay. Professor, thank you so much for your thoughts and your update today. I look forward to speaking with you next time.
Thank you, David. Good to be with you.
Good to be with you as always. And thank you for watching Kiko News. I'm David.